We're joined by Vishnu Varathan. He is Capital Economics Asia economist. Vishnu, thank you so much for joining us. Let's first of all get your reading of the situation.
Well, I think inflation could in fact surprise on the upside this time around. The dip in April was exaggerated by base effects. So inflation had not slowed down as much as the headline had suggested. And food inflation, while having eased off the peaks, is picking up slightly more again. And I think we also see from the weekly data that, like you pointed out earlier, primary inflation is on the rise. Our expectation for this is that RBI will respond with a 25 basis point move after the 50 basis point move earlier at the last meeting. I think one of the main reasons for that is that the 50 basis point move, I think, did well in getting ahead of the expectations and establishing their intent in the first place. But then again, they don't have the kind of avenue to slow down, or they don't have the avenue to pull back on the rate hikes just yet, given that inflation risks still outweigh growth risks, even if we have already seen slightly softer growth numbers and expect that in the next 2 quarters growth will slow down a bit more.
Okay, well, how does the Reserve Bank interpret all this? I mean, we had, last time a 50 basis point rate hike. Are they done, or do you see more?
We definitely see more. In fact, we're expecting that rates will hit 8% by the end of this year. I think one thing to bear in mind is that we do see that commodity prices will start easing, so supply-side inflation will become less of a concern. But given that India's economy has been doing really well, output gaps are actually in the positive territories, and I think the real risk is demand pull inflation will become entrenched. And I think that is really what RBI is getting at when they made the 50 basis point move earlier. And I think very interestingly and very importantly, they have emphasized that price stability is the utmost priority, even if it means giving up rapid growth. So they will actually compromise a bit on very fast growth in order to establish price stability, and that's the right approach that they have to take.
All right, let's just talk about the mainsprings of this inflation and where it's coming from right now, rather than Vishnu, because we do have, of course, the food picture and the energy side of things. Do you expect the effects of those to actually wear through?
Well, there are already signs that second-round effects could be taking hold if prompt action is not taken. So if we look at some measures of demand-side inflation, such as non-food manufacturing inflation, that has been on the rise. It dipped last month, but we expect that it will hit up again. So that is one very important indicator that the RBI watches very closely to look at how demand pull inflation is faring here. So I think on those grounds, I think second round effects are a huge risk for the RBI. No doubt the global picture is looking a lot less optimistic, and no doubt that even India's growth this year for the fiscal year will probably slow down to 8% or even slightly less. So these on the surface indicate that policy tightening need not be carried on too aggressively. But I think the main point here is that none of these developments over the next year or two will take India off a reasonably fast track of growth. So I think output gap will stay positive over the next 2 years, and I think the RBI will want to look ahead and look through some of these cycles here to ensure that price stability is well anchored. I think that is the utmost priority for them.
Very quickly as well, what about growth? We've got, of course, that being supported by the consumer. Are you confident the consumer can keep this up?
Well, I think if we look at some interesting figures, I think consumer durables were doing really very well under the old industrial production measure. Under the revised measure, a bit less well, though. The thing is, I think consumers have had the scope to pick up on their consumption of things like automobiles and all, which have grown at 30% year on year, because India's wage rise has been dramatic. But then with I think the pace slowing again, one thing to bear in mind is that future rate hikes will begin to cut into consumer spending. So it will come down to more normal levels, though it's not going to collapse outright. And I think that still gels and is consistent with the picture for RBI to continue tightening. So I think that really, at the moment, I think the momentum is the important thing to watch here, given the amount of uncertainty out there.
Vishnu Varathan, thank you very much indeed for joining us. Asia economist there at Capital Economics, looking ahead to that Reserve Bank of India move on interest rates. That is expected on Thursday. We've got, of course, inflation data out of the economy as well later on Tuesday.